Hi guys, welcome back to my channel. So today we are going into module 7. Just one module for us to actually round up this phase of the program. So you can actually take your time to do this, but like I keep saying, take your time, understand the program, do the best you can actually do to stay at the top. Remember, at the end of the day, it's a competition, and you're competing with hundreds of thousands of people across the 54 countries in Africa. So it's not something you want to rush just to get to the finish line. It's something I feel you should take your time, understand what you're doing, understand what the whole training is supposed to be for. It's for your personal learning, it's for your personal knowledge. They just want you to, at least, even at the end of the day, if you don't even win the seed grant, let it be that you've gained knowledge. You've tried doing something for yourself. So just take advantage of every aspect of the program. But then again, my wish for you is that you win the grant. And when you win the grant, that you use it for the right thing. Right? So without saying much, let's just get into the program. So module 7, discussion group and practice section. So I think this module is very short, it's not going to be long. So let's just go. Business plan definition. Okay, this is literally for business plan, so makes sense, and to guide you in as much as, yes, once they release the template, I'm going to be doing a review on that too, right? So but let's just see what we can get out of this. Thank you. So choosing a company or enterprise name, it is a process which forces the entrepreneur to consider objectively all elements that contribute to a successful enterprise. A good business plan is a planning tool that spells out goals, strategy, and objective in a systematic, realistic, and honest manner. A guide for operation and performance measurement that will serve management in the implementation of the project. A financing document that will obtain for the enterprise the necessary funding provided it is well researched and documented, and a financial projection and assumption are supported. So in your business plan, there is basically three items that makes a business plan. Number one is your like they listed here, a planning tool, so a document that actually tells how you plan to do this business, how this your business is supposed to run, what are involved, who are involved. Then a financing document. So this is that is what they call financials, which definitely will cover along the line. Financials is what are the finances that you need, what are the outcome of those finances, what do you intend when you start up this your business, what are you going to achieve with it in a long term and in a short term, and what are the requirements, the monies that you actually need, what are the things you're actually going to be using this money to get, and all sorts. Then the last one, okay, I actually talk about the financials, but then the second was actually a guide of operation and performance measurement. So this is also where your milestones falls into, right? What are your mode of operation? What is your financial model? What is your model canvas? How do you get these your product or services to your customers? What are the channels, the requirement that you need to use and do that? Then, which brings you to the financials. I've already talked about the financials. What are the monies you need, and how are you going to make profit when you invest this type of money, this amount of money into this project? How are you going to make your returns from it, and how soon? What are your milestones? the planning circle business studies, competence, governance, performance improvement, expansion or cross-border, initial public offering, crisis management, exit strategy, succession planning, tax planning. Okay, let's see if I really don't know much about this. Either I've not really been taught on it, or I don't have an idea on it, and I didn't make researches on it either. So let's just move. This module is very short. A winning business plan. Below is a sample of a winning summarized format. Executive summary. Meanwhile, remember that for the purpose of this program, you guys are going to be writing a business summary, not a business plan, because business plan cannot fit into a 2-page plan. So you guys are actually going to be doing executive, more like saying you guys are going to be doing executive summary. So that's what you guys are going to be submitting. So you need to pay attention to understand how that works. Executive summary. This may be all that top management may read for decision making. Therefore, ensure that it includes project description, market, production capacity, initial projection cost, financing plan, financial projection, financial and economic performance indicator. Then conclusion. Right, so why I need to talk about this is because this is exactly what, just like they've given you a hint, this is all that the management need to read for decision making. So this is basically what Tony, the main entrepreneurship program, is going to be requesting from you to decide whether they are to fund you or not, whether their partners are going to fund you or not. So you need to pay critical attention to it. Like they say, project description. What is your project that you're actually presenting to them? What is the market you're presenting to? What is your market target? Is it a diminishing market or is it a growing market? Right? Who are your competitions? Your product capacity, total project cost. How much does it actually cost for you to run for this program? So that's basically asking, what is your ask? Because ask is, what do you want? If you're doing a pitch or a business plan, what do you actually want? Total project cost, financial plan. So how are you going to manage this money, and how is this money supposed to make more money for you in the long run? Financial projection. How will this money grow? And in what year are you supposed to be making tangible returns from it? Financial economic performance indicator. Then conclusion. Anyway, they are going to send you a template on that, but I think you need to pay attention to this. Financial statement. Financial statement refers to a specific set of reports produced in an entity's accounting system. Financial statement refers to a specific set of reports produced in an entity's accounting system. The objective of these reports is to provide information about the entity, right? A complete set of financial statements include 5 components. Statement of comprehensive income, the income that the entity actually make, right? Statements of changes in capital. Okay, this is the amount we actually started the project with, but this is how much it actually costs at this moment to run this project. Statement of financial position. What is your financial position right now? Are you going into bankruptcy? Are you growing financially? Are you making more money? Is the company running into debt, or are they actually making real profit? Statement of cash flow. The note of financial statement. Component of balance sheet. Non-current asset in business. Current assets net assets, intangible asset, example goodwill, long-term liability in business, current liability, distinction between debt and creditor, retain earning. Okay, I don't know so much about balance sheet, so I wouldn't talk about what I don't know. Right, so let's go. Income statement, also known as a profit or loss statement or the statement of revenue and expenses. The income statement primarily focus on the company's revenue and expenses during a particular period. Right, so is a profit or loss, just like I said. The last part of it said the income statement primarily focus on the company's revenue and expenses during a particular period. So in a period of 1 year, this is how much the company has been able to make or lost. So with your income statement, you know if the company is actually growing, if this entity is actually making more profit or they are going more into debt. So are they losing money or they are gaining more money? That is income statement. The income statement focuses on the 4 key items: revenue, expenses, gain and loss. It does not cover receipts, money received by the business, or the cash payment disbursement, money paid by the business. So it's actually based on how much you make, what are the revenues, what are the expenses that you made in the business, what are the gains and the loss, right? Cash flow statement. This is a financial statement that shows how cash and cash equivalent flows in and out of a business within a particular period. In other words, it helps ascertain if a business engaged in a cash transaction during a given time interval from which it settles its debt and take care of other financial, investment and operating activities. So your cash flow, just similar to your sheet, your cash flow sheet, but the statement, just like your income statement, is actually supposed to be responsible for knowing when money actually came into the account, that into the business, into the entity, that you probably use in paying debts, like maybe paying your staff, your workers, paying for fixed costs, or paying for variable costs, which is costs you actually incurred as a result of running the business, day-to-day activities, maybe for promotion and all sorts. So money that comes in is your cash flow, and the one that also flows out. So key takeaway: a cash flow, I think this explains it up. A cash flow statement is a financial statement that summarizes the amount of cash and cash equivalent entering and leaving a company. So the money that comes in and goes. The cash flow statement measures how well a company manages its cash position, meaning how well the company generates cash to pay its debt obligations, and fund its operating expenses. Right? So it's also, that is well explained, so there's nothing to explain there. The cash flow statement complements the balance sheet and income statement, and exactly what I said earlier, and is a mandatory part of the company's financial report. So why I think they are taking time to explain this part is the fact that you need to include this. This is where a lot of people failed in their last year business plan. You need to actually include this inside of your business plan. But definitely, yes, when it's time, I might have to share my business plan with you guys. Right. Conclusion: every business needs to have a written business plan, whether it is to provide direction or attract investors. A business plan is vital for the success of your organization. Financial statements are used for many different purposes by many different parties inside and outside the business. Clearly, all successful business people should have a good basic understanding of financial statements. Financial statements contain critical business information and are used for many different purposes by many different parties inside and outside the business. Clearly, all successful business people should have a good basic understanding of financial statements and the main financial ratio. So this is very important. In your business plan, you need to include a clear financial statement. I know I'm hammering on this because this is one of the things that pushed a lot of people out for last year, and I hope you won't be part of the people that it will do the same thing for. Right? So this particular module is very short, and I like the fact that it's short. So thank you very much for watching, and we just have one more to go so that we can actually dive in fully into the business plan, which is the topic that everybody has been wanting to know, because that is what failed a lot of people last year. Right? So thank you very much. I'll see you in my next video. Bye.